presenting on American International Group, AIG. They're one of the largest financial service providers in the world. They have a balance sheet that boasts over $1.07 trillion in assets. I feel like this is one of their strongest points. They're also very diversified. Although 60% of their sales are in insurance, primarily life insurance, they also provide retirement services and asset management. Some of the strengths about AIG. First of all, they have low obsolescence risk. This means that pretty much no matter what, people are going to try to mitigate their losses. And this can come in the form of an insurance policy. This works to their advantage because as existing customers become more wealthy and have more assets and investments to protect, they will likely stick with the company that they're at for certain insurance policies they already hold. So here, AIG's strong reputation and their low obsolescence risk are both strengths. Another opportunity that AIG is provided with is that their former CEO, Hank Greenberg, spent nearly his whole career trying to develop relationships in emerging markets and basically just broad overall. This is important, especially in foreign countries, because it's in markets such as China and Eastern Europe, it's more difficult to gain and hold licenses with either companies or even to have the government allow you to operate within that country. So AIG having a strong hold there is definitely an advantage in a growing global economy. Here's 3 facts that work to AIG's advantage. Emerging markets only account for 10% of worldwide insurance premiums, and emerging markets GDP only accounts for about 10% of the world GDP. So we can see here that as these numbers increase, the 1 to 2% of GDP that is accounted by insurance in these countries may increase to the 4 to 8% in developed markets. So this provides a great opportunity for expansion in foreign markets. Some of the weaknesses and threats, just like most, well not most, but many of the financial firms, they are exposed to this subprime mortgage issue. Recently they were downgraded from a AA to a AAA, so this may make them less attractive to institutional investors. In addition, their portfolio, as I said, is subjected to the subprime market, but they're not a lender, so they're not directly exposed. The way that they're exposed is through their investment portfolio. So recently, AIG suffered a $4.8 billion loss due to write-downs in the subprime market, but I calculated that this is actually only 0.4561% of their total $1.07 trillion in assets. So I don't see any, unless there's some type of major action in the future, I don't see that being a real problem for AIG considering their strong asset base. Here's just a few financial numbers that I have for AIG compared to the financials market overall. I didn't do it compared to the industry because, like I said, they're a very diversified financial company. They offer insurance as well as investment vehicles. So one of the most impressive numbers I saw here was the target return for financials is 1.53, but my calculations for this company are about 35.8%. The target price I came up with is 69.84. And they're currently, as of about a half hour ago, we're trading at $50.70. In this next slide, you can see here, this is about February 11th right here, where they had that major drop due to their $4.8 billion in write-downs. But most analysts realized that by the next day, the market had very seriously overreacted. AIG has fell about 33% in the last 52 weeks, and I see this as an opportunity for us to get in cheap on the stock.